Hey guys, Akil Stokes here. Welcome back to another Trading Edge video. If you guys are brand new to the channel, this is a video I do each and every weekend, sharing with you some of the best trading opportunities that are on my radar for the week ahead. And of course, giving you all types of other educational bits that will help push you along your path to becoming a better trader. I am both tired and busy this weekend. So no camera and no fancy edits. We are going to get straight to business and hop into the charts. But first, if you haven't watched it or listened to it already, I highly recommend you check out the latest Trading Coach podcast episode that I put out, 1099. I think it's called like 10 warnings of something. I don't know. It's a long episode. It is a very, very, very good episode. It's a look into a side of trading that I haven't done before. So I had a really great time recording it, and the feedback has been amazing. So it is a must-watch/listen in my opinion. So we're going to start here on the pound yen. And I haven't had a lot of time to do my research yet over the weekend. Again, it's been a long, busy weekend for me, but I did not expect yen weakness to end the week. We spoke about this in the last Trading Edge video about the Bank of Japan interest rate hike that was probably most likely coming at the end of the week. That did happen. They did leave the door open for future hikes as well. And I thought we'd see yen strength, and we have not seen that across the board. So I got to figure out why. If you know why, please leave it in the comment section below. That would make my life a lot easier. But that's a bit of a surprise. Regardless, I'm a technical trader, so fundamentals are secondary. I think they're cool to understand just for general knowledge about the market. But as far as making trading decisions, we do them, or I do them, off the charts. And here's what I see. We have had a big rally to end the week. And the counter trend trader in me loves to see these big rallies because they typically mean, I don't want to say big areas relief, but little sections of relief. And as counter trend traders, that's where I like to make my money. So we go through our normal, boring, monotonous IPDE process, and let's look at where price is trading at. I'm here on the daily for the pound yen. I'm just going to simply put a horizontal line right on the close of the week and ask myself, Akil, are we at any level of interest? So a very, 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 very long time ago, because I'm old now, my trading mentors taught me probably the greatest saying ever in life, not just for making sure you cross the street correctly when you're over in London, but for analyzing the charts. And it is look left, structure leaves clues. So I look at where my horizontal line is, I look left, I find clues that price has found previous structure support, right? A lot of S's in a row. Structure, pause, support at this level recently and multiple times in the past as well. And what that tells me is that this is going to be a level of interest. Now, a level of interest does not mean that the market has to reverse or do anything special at this level. There's nothing in the market where it has to do anything. The market does what it wants whenever it wants to, right? But it does mean that this is a level that we should pay attention to because we know that price moves off of human behavior, and humans are rather predictable with what we feel important and what we feel not to be important. So right now at this level, I would be looking for a potential counter trend trading opportunity. And that opportunity is going to get a little bit clearer as we go down to our lower time frame. So we hop down to the 4 hour, right? We can take this kind of bigger zone of structure and tidy it up a little bit. I'm going to measure, well, let's do this, right? In the very first courses we have over at Tier 1 Trading, we teach about the basics of reading a price chart, drawing out the ebbs and flows of price action. And a lot of traders find it boring and stupid and dumb because it's not necessarily a strategy, but the way we organize everything is in a way that you learn the basics, and then, which is your foundation, and the course is literally called the foundation course, and then you build everything on top of that. So when it comes to identifying levels of structure, if I were to just simply draw out my ebbs and flows, where I'm going like this, ebb and flow and ebb and flow and ebb and flow all the way down, if I want to see which levels are important, well, look at this. I'll just take one of these ebbs, connect the dots to one of these flows, and say, boom, this is a previous level of structure that should be important, specifically the top part of this level being a key level. And you can see price action is banging right into that, I'm going to draw these lines back down here because this is going to be important again as well. I'll just talk about it right now. As far as targets go, and we're getting a little bit ahead of ourselves, right? Well, guess what? This other little line that I drew out before, this previous retracement that we had here, well, that's a good predictive point of where price may go next if we are going to go lower. And boom, what did I do? I set up my trade opportunity, right? I set up the area in which I'm looking for price to hold. I set up the area in which I'm looking for price to go to. Bada boom, bada bing, right? That's kind of the overall premise of the trade. So we can put some other stuff in here too. If we take a Fibonacci, it looks like a 618. I'm guessing here, but let's just see how good my eyes are. Fibonacci retracement, excuse me, from the swing high to the swing low. Oh, look at that, dead on. 618 retracement. So for you guys that are CTS traders, combined technical score traders, you can add your score up. RSI on this time frame isn't necessarily overbought, at least by my standards. I use 80-20. If you use 70-30, then you certainly are. But you have a little bit of confluence at that level. So an excellent level to look for shorts where if price action can prove to hold at this level, and by prove, I mean give us a reason for entry, we can look for a little bit of relief back down into this zone right here. And again, keep in mind, this is a counter trend trade, so I don't think there's any reason to look for any type of, there's no reason to look for any type of big continuation to the downside, right? We've been putting in a series of higher lows, higher lows, higher lows. So there's no reason to think that we're going to break that, right? Unless maybe you're trading on a monthly or something like this and you're looking for a breakout into a big monthly flag. So as a counter trend trader, the idea should be get in, get out, and then boom, look for the next opportunity. Speaking of next opportunities, let's head over to the other one that was on my radar for today. It was slim pickings in the market. But let's go to the Kiwi New Zealand dollar. And this is an interesting one because it kind of follows up on conversations that we've had in our live trading room this past week. We started off the week in our Monday Q&A session, right, which is like a private closed door thing we do for our premium members, where we had a question about head and shoulders patterns. We had a question about aggressive entries, all that fun stuff. So kind of the theme throughout the week has been looking at head and shoulders and kind of letting the mind be creative about different ways to get involved. And we look at New Zealand dollar here, and I'm curious, would you call this a head and shoulders? Right? If we had maybe 100 traders in the room, maybe, I don't even want to guess, speculate numbers right now, but I'm sure some would, but probably most would not. And here's what I want you to remember, and again, this is another thing we talk about in the Foundation 2 course. It's more important to understand what the move means versus just being like kind of locked in on the move. Meaning that a head and shoulders is a very specific type of pattern. It looks like this right here. We come down, we go up. We've talked about this a million times on the channel. We do this, and we retrace, and it's a classic reversal pattern. Now, you can probably make a reach and find like a shoulder and a head down here and another shoulder here, but it could also be a bunch of junk, right? But the key, regardless of this, of if this is a head and shoulders or not, is the consolidation at the bottom and the violation of structure. So price action dips down. We have the clear consolidation at the bottom. We do all this wonky type of stuff. There's patterns in here as well. And then we have our high watermark, right? A high watermark here of our consolidation, a low watermark right here. These are our decision points. We end the week with a higher high, higher close, which could be looked at as the same as a violation of a neckline. So even though this may not be a technical head and shoulders pattern, as a trader, you can look to trade it in the same type of way. And the fact that, hey, important level was violated, that means predict price will go up. Next thing, where will price go up to? And we'll dig into that on a lower time frame. So hopping down to the 4 hour, right? And there's a whole lesson in there as well, but I want to make this short because I need to do lots of more things today. But hopping down to the 4 hour, again, we can ask ourselves, where is price likely to go next? The main level that stands out to me is going to be right here. Again, this little consolidative area that broke and kind of caused the big move down. We can bring in some volume as well. There's another great conversation this week on the journey of volume and see if there's any things that stand out. Look at that. We have obviously higher volume here in the consolidative area, which is to be expected. We have lower volume, a little bit of a void here, then it picks up slightly kind of right at that level. So a good confirmation that 57.50s is a decent level, right? And that's all we're looking for with these, or at least for me with indicators, is price action is my first tool. indicators confirm, give me more clues, confirmation, I guess you can say, if you want to use that word, that the level that I'm looking at is indeed a positive one. We could probably bring a Fibonacci here as well. Again, I'm doing all this for the first time because this is how I get down on these videos. I don't like doing analysis I like it being fresh and natural, so you can see the brain actually spin and me mess up sometimes as well. But let's see, I'm gonna say another 618 in this area. Fibonacci retracement, swing high to swing low. Yeah, at the top end. I would still go for the bottom end right here, 57.50s, but you do have a 618 in that level as well. So again, just like the pound yen, we've identified a previous level of structure here. We've identified a potential target zone. And now the question is, how can I trade, or is there an opportunity for me to trade from here to here? So let's dive one more time frame down to our lower time frame and see what's happening here. Price action has given us a double top, right? We've come up, if I can find the right, nope, I can never find it on the first try. There we go. Price action has rallied up. Actually a little bit of a rising channel too, but we've rallied up, we put in the top, we retraced off of it, we put another top. Now a double top is a classic reversal pattern. We're not at a level where I'd be looking for short, so this one would be irrelevant for me. But if we were to break the valley, right, so the bottom of this V point right here for the double top, if we were to break and violate that level, that would be a bearish sign. Ooh, by the way, who is it? Was it Sarah? I think it was Sarah I was talking to. Good example of a ascending triangle here as well. Sorry, side note, side conversations. We've been helping traders out with a lot of things. This is a good one. Not Sarah, Stephanie. Sarah was looking for something else. Anyway, back on track, Akil. So right now at this moment, I would not be looking for any longs because of this double top. That is something, again, that invalidates the opportunity for me right now. So what I would require is what's called a fresh break. And what that means is this. I want to see price action take out these highs, right? Because if we look at this as a trend, right? Price action broke out of this ascending triangle. Boop. We created a new structure high. We retraced. In a trending situation, we should have violated this structure and put in a new structure high. That would confirm the bullish move. We did not do that. We held, right, which is a bearish sign, and pushed back lower. So we haven't violated this level yet, so there's no confirmation of the bearish move. So this could be consolidation. It could be a high and tight flag. I don't know what it's going to turn into. If I did, I would never lose a trade in the market, and the government would probably capture me for having the ability to predict the future. But back to the charts. What I need is still that same confirmation. The same confirmation that I would have needed here. I just need to wait for it again. So if price action were to give me that confirmation, a break and close above here, then that would confirm my prediction that price is likely to go there. So again, it's, trading is a game of, it's not just making predictions, right? Predictions is a big part of it, but it's being patient in your prediction, right? You want to be predictive in your analysis, reactive in your execution. So again, what that means is that I want to predict things, but I just don't want to hop in right now because it's an idea. I want to look for what I believe are the best trading opportunities, and that means waiting for the market to give me a sign that what I think is going to happen is more likely to happen. And this helps traders in two ways. One, it gives you a better probability of winning. Two, it keeps you out of some of those sneaky losers. And avoiding losers is just another way of winning, right? Addition by subtraction. Hope you guys enjoyed the video. Remember, check out Trading Coach Podcast 1099. It is my favorite episode so far, at least the ones that I can remember. Maybe a little recency bias there. Also, leave me any comments below if you have any questions about anything in the video or anything trading related. And do me a favor, hit that like button if you're new, subscribe, and check out the rest of the channel. Lots of cool shorts uploaded on a daily basis to help you along your trading journey. Hope you enjoy your weekend. Go Everton. Until next time, plan your trade your plan. Take care.
I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.